All right, welcome guys. What's up? Good to have you all here today. We're gonna go ahead and kick this off here in a little bit. Gonna have everyone start to log in. I also still have to actually announce that I'm live. And then guys, if I already have you here right now, you might as well make sure you're subscribed. Okay. That way you get notifications every time I am live. Alright, let's see this thing. Connect the phone ski. Get the camera going. But what's up, Portugal? What's up, Lindsay, Jose, Carlos, Seth, David, Mylene? What's up, everyone? All right, so go ahead and let me know here in the chat if you have anything specific, any specific pairs you want me to look at, indices, crypto, or you might have your own chart. So let me know what you guys have in mind here. All right, let's see here. All right, we are officially live. And I am now spamming all these chats. Perfect. How'd everyone's first trading day go so far? Today, I ended up not even being able to truly position myself well into indices, so pretty mellow start. What about you guys? Paul tried to cook us. For real. For real. I ended up getting, I tried taking a setup. I'll walk you guys through it. I tried taking a setup on the, once after that news event, so I didn't wait until after Powell and everything swept the lows. I just ended up getting wicked, into wicked break even before everything. Yeah, S&P came into the zone for sure. Yeah, well, I was curious to see what you guys all had set up. All right. So, hold on. I gotta get a couple things here marked up for y'all. I was also waiting on a gold buy as well that kind of escaped me, but whatever. Okay, so we'll give it a couple minutes. Let me see. Let me get my camera going here. Chat with y'all for a little bit. Let's see. Oh, here we go. Nice. Okay. All right. Okay. So what's up, guys? How's everyone doing? All right, cool. So, a couple updates before we get started. Before we kick things off here with y'all, I see y'all starting to flood in here. September was a strange month. Just audited it and had more no entries for no reason or another than I've had since I started journaling. Interesting. Why do you think that is? Was it because were the correlations throwing you off a little bit? Was it a matter of indecision? Did you have? I think this is a good point just to talk about before we dive into the markets and everything. And I'm glad you're auditing everything end of the month. You know, such a good time to not just review the, not just review. Let me move this slide here. Not just review the month, but the quarter, especially going into October, pre-elections. We have October, November, December. So this is the official start of quarter four. So I think looking at your behaviors, the outcomes, and kind of seeing what you can duplicate and what you don't want to, I think is really important. So a lot of no entries. Yeah, give me some perspective. We had a bunch where the correlations had the first indice react off the zone and not necessarily the lag for some reason. Yeah, and that happens. That'll happen. There are definitely seasons where that's the case. I've been trading, obviously, this the way that I trade, especially with correlations, for about, I think for me, the correlations, like the divergence with correlating pairs, I think I added that to my system, I want to say 2 years ago. So there's usually, I think there's about, if I could add up the total days where the correlations kind of throw things off, I would say that where I'm sitting at around maybe 10%, 15% of days where it's a little bit harder to differentiate, or the market will get to the zone and it'll mitigate a specific spot, and it won't be like one of the indices just won't even get to the zone, and the market will just kind of carry on and continue. And so it's kind of just the cost. The way I look at it, it's, and after looking at everything, it's just the cost of the idea. And so it doesn't necessarily mean, especially because after you take enough trades, it doesn't really mean, so for example, maybe September you had more trades where the correlations, like the lagging, all that, it just wasn't really working out. And that's okay. That doesn't necessarily mean like, oh, my strategy doesn't work anymore. Should I stop doing that? All it means is that it didn't work as often, or you missed out on a few trades. And the reason I bring this up is because a lot of people make a very critical mistake trying to have a perfect system instead of just a great system. And so you want to be really cautious in what you start to change, or if you're changing things without having a big enough sample size. So the sample size that you have is really, really important. Really important. So, because I've experienced it too. I remember the first time where I was like, some of these trades aren't really working, or I'm just not even able to get into the market, and so I missed the move. And I was like, okay, before I get too reactive, let me look at how often this happens. Let me go and just dive deep into tons of different examples. And then after doing that, basically I came to realize like there's going to be, sometimes it's a week, sometimes it's just here and there. I think September was a bit more frequent, where in the marketplace as a whole is a little bit different, right? And so I think we did see that happen quite a bit, especially with NAS. I think NAS in particular, and it kind of made sense though, because NAS has not been as bullish just overall as US 30, as S&P. We haven't seen NASDAQ go and hit all-time highs again. So I think we're kind of seeing this shift in momentum happen. And I think we're going into this October. I think NAS is going to end up being probably the stronger bull, because we haven't really seen it go and crack all-time highs. And so I think we're going to start to see, because we're kind of seeing a shift in momentum. You guys kind of noticed the markets did get a bit choppy. Certain days, like for example today, where we didn't really get good positioning with New York Open. We didn't really get great price action until in reality until after we had Powell speak around right around 12:55 p.m. Chicago time. So yeah, I guess the big thing is, if you're starting to notice a pattern, remember that what's important isn't just, don't fall for the recency bias. So we sometimes make things way bigger than they really are, just because something is happening recently. So don't allow that to completely change your overall approach to the market. Make sure you have a big enough sample size before you start to make changes. And sometimes you do need to, right? Sometimes you do need to adapt, whether it's to a specific asset, whether it's certain market conditions, whether it's the overall financial system maybe has changed. So yeah, you can make some changes, but before you do change critical elements of your system in general, then you want to just make sure you have a big enough sample size. All right, so missed the trigger on a few. I understand that it's just the way it went this month. I'm sure things will shift back. What's up? Yeah, and here's the thing. Just keep it in the back of your mind, right? See how things go. See how things play out. And if it continues to be a pattern, then yeah, it could be something worth diving into. And this is also the way that you do build better systems. Because, for example, the way I ended up kind of accidentally trading with kind of away from retail was through certain patterns. Like, you just kind of you start to see certain things. And so I didn't realize I was starting to trade after the market sucked liquidity. I wasn't quite trading the way I trade now, but I started to wait for big spikes and trade a little after those things happen. And I didn't really have a perfect system, but back in 2017, I just started to notice certain things. And then all of a sudden, I waited a little bit longer for certain trades, and all my system started to transform. So if you do start to notice patterns, keep note of them. And then if you have a big enough sample size, then you can start to introduce or eliminate certain things in your system. But all right, what's up, guys? We are, all right, people plugging in. Let's get it. So let's dive into it. First and foremost, welcome everyone to another week, right? Live market analysis. We go over a little bit of everything, all right? We dive into a little bit of crypto. We dive into, obviously, forex, indices, metals, sometimes oil, stocks. And yeah, there's a lot that we cover in usually an hour, sometimes a little more. But some announcements before I get started. This November, so right after elections, I will be going to California, Arizona, and Texas, and we will be trading live. So in the room, you can be in the room, all trading together. It'll be live. It's gonna be awesome. So I'm excited to see you guys there. It's gonna be sick. And then also on top of that, if you want to basically kind of like spend a couple days with myself, Junior, and a couple other special guests, then yeah, we're opening up Airbnb Mastermind. So badass Airbnb, stay together, work out, get some food, do specific trainings, like one-on-one trainings, diving deep into the mind, the psychology, exactly how your system is built out, financial budgets, all that good stuff. But yeah, really, really intimate and just like diving deep. So if you guys want to attend something like that, let me know. I'll go ahead and drop the link here so you guys can take a look at that and get your tickets. But it's gonna be sick, so I highly recommend you guys to check it out. And again, this will be November, basically the week of November 17th to like the 22nd, I think. So yeah, check it out, guys. It's gonna be dope. Links, I got you. And if you want to stay at the B&B, California is sold out already. So it's gonna be Arizona and Texas. If you guys want to, hang out with us for a couple days and do the thing, just shoot me a message. Right, there's I think 5 or 6 slots left, so it's going pretty fast. So give me a sec here, and I'll be able to give you the links. Let me find it. Where is this? If someone here, if I can get a mod to help me out, get that link, that'd be perfect. See you there. What's up, Gio? Bro, wants to tell you that thank you for your consistency and mindset. Always grateful for your leadership. Henry, man. Appreciate you, bro. All right, so whenever I can find these links, I'm gonna take a couple seconds to look for them, because I don't have them right on hand. Give me a sec. You know, you'd think I'd be ready. You would think. When Chicago? I mean, I'm here, so I'm here right now. But having a formal event in Chicago, I feel like, yeah, it's overdue, huh? Who do I have in Chicago on with me right now? Let me know. Let me know. All right, so let's dive into it, guys. I'm gonna start things off. I do have a poll here and to see where we. Yeah, I was born in Chicago. So you guys want to start with forex and indices, cutting it close. Oh, it's tied. No way. You guys tied it right at the very, very, very end. Literally before I was gonna close the poll, you guys you guys tied it up. All right, so forex or indices, you guys decide right now. That's gonna be on y'all. All right, let me get this link for this for the live trading sessions and then for the Airbnb masterminds. Just give me another 15 seconds, guys. It's like right around here. And here we go. Finally, there it is. I'm lagging here. Okay. Here's the link, guys. I'm gonna pin this as well. Alright, so live trading tour and Airbnb mastermind experience. Oh no. Alright. Here you go. I'll pin that at the top, guys. Click that link and then you will have the ticket links. And then if you have any questions, just shoot me a message. But anyways, let's dive into it, guys. Let's go. You already know I can go into psychology for quite a bit, but let's look into some markets and then we'll. I'm gonna start with indices because it is gonna be a little bit quicker. So I'm gonna kick things off there. All right, and then we'll go from there. So let me go ahead and close this. All right, so you guys should be able to see my screen. Perfect. All right, so we'll go here. Now, Euro USD sells from last week. For those of you that were on live on Friday morning, it took Euro USD sells all the way down to here. And then our target was this liquidity, so it did pull back before crushing and obliterating all these retail positions here. Some of you maybe took a buy down here. We did have a nice little sweep before the market rallied. So I could see buys here. So let me know if some of you took this. Would be awesome to know. But yeah, we're going to kick things off with indices because they had a very, very good movement right before the market closed for the day. So let's dive into here and kind of see what's happened. Now, before I dive into today's price action though, I do want to go over the month because we are officially into the new trading month. So September 30th's candle is now closed, and right now technically we are trading Asian session because it is October 1st out there in Australia, Japan, the Asian markets. So it's game time. October is upon us, and looking at indice markets, guys, what an eventful month. As we close out August leading into September, we talked about the pullbacks to rebalance the market and continue across the board with US 30, NASDAQ, and S&P, and we got that. We got super bullish closes for the month, and I do think this is the month for NASDAQ. I think this is the month where NASDAQ went absolutely wild. So I definitely want us to put some focus in here. I think today, honestly, which is funny enough, I feel like today was such a good kickstart to the trading week. There's a chance we might be seeing the low for the week already, but I'll dive into that here in a second. But now going into the weekly, guys, and again, the weekly time frame definitely bullish, and honestly, we don't really need to look too much at the weekly. I think we can look more at the daily. What we do have in mind is that looking at how the markets is flowing, there's most definitely still open sell positions and imbalances left behind over here. So the market becoming efficient here at some point will happen. And if you were on the Spanish session that I hosted here on YouTube yesterday, I talked about how there's possible distributions playing out, but you don't want to get too ahead of yourself because you just don't know exactly how things are going to happen. So we did have signs for some dropping, but whether the market was going to stay bearish or break the structure or do what I did, we can't get too ahead of ourselves. So the market really pushing, and today we kind of got to see that. We're not quite ready to get down here yet, but at some point I do think we'll get back into this 40,250, 40,500 range with US 30. Looking at NASDAQ, similar situations. NASDAQ was really similar in regards to, we have the same move, big drop September 11th before the market rallied. Then we also saw quite a bit of volatility with FOMC. Right? FOMC really took us higher with either, with all the indices, and we started to see momentum. Drop with NAS, US 30, S&P. You see it happen quite a bit, and so I know a lot of people, they want to pin the highs. So as we go over the 4-hour chart, we get a little bit more detail now. You saw how US 30 made a massive wick after Powell here spoke. So we see huge drops, and then the market rallies. US 30. NASDAQ, same situation. Market drops down to here, and it actually basically gets down to these levels, not quite down to here, so which is really interesting. We don't actually drop into this zone. The market really respects it, holds the structure that it was in before it starts to push up a bit more. And then you have S&P, where S&P did get to our zone where we were looking for buy scenarios. Now S&P here, it had opened a sell position that liquidated these retail buys. The market got close to closing this position, didn't quite get there, so I did have this still open. And then when S&P came crashing down to this zone, it came right back. Look at this, guys, right where we had that last point of supply, right where we've seen support before. These are always key levels for me, especially after you've seen a liquidity capture like this one right here. That's just money. Now I know some of you maybe hesitated in buying, especially if you were looking at just different assets, right? Different indices. And I really would have wanted a buy on NASDAQ, but when S&P was exactly in this area, NAS was a little bit higher. And I had a feeling NAS was going to respect this higher low. Because it met structure. Like it caught like a really strong level of structure here, while S&P on the way down was just so much more aggressive. And then also simultaneously we have US 30. And US 30 came right back into the zone. Same thing, stayed within its structure. We saw it here where we had seen some imbalance from before. You see US 30 target this imbalance and close out some sells here before it rallied. So huge moves. So a lot going on. All right. A lot going on here in the market. But the best thing is this. It doesn't matter if you miss this whole thing. Why does it not matter? It doesn't matter because you should get another chance sometime this week. Maybe it's tomorrow. Maybe it's Wednesday. But it's really transparent on how the market has shifted momentum. And at the moment, so just looking at this right now, we had a bearish structure. So we had lower lows, lower highs, lower lows, and US 30 briefly cracked above this high, and then kind of getting back there now. So we're starting to see this shift in momentum, right? This was in my opinion, we had bearish momentum. We get down to here as well, and then we finally start to see some bullish movement here. I'm not convinced that this is completely bullish yet with US 30, but we are getting close. And the reason I'm not convinced is because as soon as we got above here, we did lose a little bit of momentum. However, it does look like we're going to keep trading a little bit higher. Now that's US 30. Now if you look at NASDAQ, on the other hand has broken above this previous lower high. So we definitely got above these highs. And price is trading way up here now. So we can see that NASDAQ's bullish. NASDAQ has this bullish structure definitely locked in. And we can definitely start to see, okay, where does that money come in? Where do we start to see those massive sell-offs that end up liquidating so many players? Just look, and we kind of had warning signs, right? There was a lot of retail lows right there. There was a lot of liquidity here. And the market here, just a little bit after, right? Just a little bit after the news event, because remember, this is, not only is it just Powell speaking, but it did end up with some questions, right, from the audience. So after, a couple words of wisdom, of some perspective, the market was able to start to react. So right here, about 15 minutes after the beginning, this just bodied so much money, because this is a pretty decent drop, guys. We saw a quick drop. So if we're looking at NASDAQ, exactly, millions liquidated. You see a swift drop of, believe it or not, the market dropping 0.69%, 137 point drop, especially after so much liquidity is built up here. It's pretty significant, and this is orchestrated, right? These are intentionally done. This did not just eliminate Monday's price action, but this took out, right, Fridays, Thursdays, going into Wednesdays, buyers. So we had, 3-4 trading days worth of liquidity wiped out with with US 30, with S&P 500. S&P 500 came back to mitigate Tuesday's positions. So, of course, there is quite a bit of movement here. And to give you guys a better perspective, right now we saw a sweep of the low and the market starts to push. This is NASDAQ. But of all of these positions, I think what's most suited for buys is not US 30, it's not NASDAQ, it's S&P 500. S&P 500 came out swinging. The drop, massively aggressive. Yes, it was 35 points, but still 0.62% drop, huge drop. This liquidates actually a full other day's worth of traders, of positions. So we saw just an enormous amount of money come in here. And I want to show you guys here just kind of where it all starts, right here. Again, this 1:10, this is Central Time, so 2:10 EST. We're talking about 11:10 Pacific. The market sweeps these lows and rallies. So at the moment, US 30 is the strongest bull. This bull is juiced up, TRT, whole thing. This thing is just ready. So what would we wait for here? Guys, I love buy positions. I think we can take a position. If I'm going to get into a trade, it's going to be below this structure here. To me, this looks like it lured in sellers one more time before this thing just ripped. So I would love to see maybe some imbalance get filled down here before we see quite the movement. And if you look prior to where the market reversed from and extended here, the other points of reversal that are pretty frequent go back to kind of like this area. So we have already seen some support here, some support over here, clearly some reversals from this zone. So I think we've seen some pretty decent reversals. And so kind of when you get down to choosing where you want to buy, especially if you have a massive imbalance, you have a couple options. You can either look for like open order blocks. So for example, here you see that the market right here was a bearish candle before it started to rip. So sometimes we get reversals off of these order blocks here. So that's not always a bad place to take a position. So here could be an area of interest right over here. And honestly, in my opinion, I would look to take this a little bit higher than lower. We've seen the market reverse from here in the past. Right there, you've seen reversals. Right here, you've seen reversals. Right over here. So I kind of like an entry right around the zone. Maybe we're talking 5,712.5. Now again, guys, this is with this data feed. Your data feed might be a little different. You want to look at the candles, you want to look at the overall movement, but my prices on this chart are not going to be, they may not be like yours. So I like a 10-11 point stop, and I do think we have a good chance of having a pretty solid risk reward here. So depending on how we get here and how we work our way even lower to this area, we might be able to extend this quite a bit, but it will depend a lot on how we work our way down to this level. So maybe it happens tomorrow, maybe it happens later on in the week. We shall see. And yeah, the exit could definitely change, completely dependent on the way in which we get down to these levels. So definitely keep that in mind when you're thinking about indices, for example, something like S&P 500. So if you're thinking to yourself, why S&P, right? Why not NASDAQ? Why not US 30? Really, it's pretty simple. S&P has a lot more to drop. So if we were to see S&P work its way down and just crash to these areas, there's a really good chance NAS would do something similar. But as you can see, the market with NASDAQ does not go up nearly as much as S&P does. So we can just see that, one, it's a little bit less volatile. So that could mean that it might be just less volatile to the upside, but it can work its way even lower. We just might see NAS get down to this level instead, because to me it looks like it left this open. And so that's why I would just wait. I think S&P will probably get to this zone after NAS would get to its zone, and same thing with US 30. All right, US 30 is not as bullish as S&P. This could break this low briefly before moving on ahead. So that's why I keep these things in mind. And these correlations and just this kind of the way I approach the market, it saves me from losses all of the time. And I'll give you an example right now. So a lot of you were like, Mike, I like USD JPY for the buys. For those of you that remember, I was getting sent these ideas for USD JPY buys, and I said, guys, I like the idea, I like the direction, but in terms of precision, I think you could get wigged out, and I think there's a better option. So let me break down exactly what happened here and why we chose CAD JPY over USD JPY. And this is just literally why I do what I do. So, okay. So CAD JPY and USD JPY. As you guys can see, one of these worked out better than the other one. Well, let me delete this fib for right now. But what had happened here? So, my bad. So here's the situation. We saw CAD JPY sweep the low, sweep liquidity, and then make higher highs. Great. We saw USD JPY clear the lows, sweep the liquidity, continue, make higher highs. Fantastic. Then the market gets back to this zone. Now USD JPY had its area over here. I've deleted it, but it was basically like somewhere like right here, basically. It's looking for buy opportunities. Okay. What happens? Friday, and I talked about this on Friday's stream, But Friday we get into the zone. We get to USD JPY zone. So it starts to pull back, and this gives the heavy pullback. So this works its way lower, and it's basically sitting at like 886, under 886. Now at the same time, CAD JPY, as you guys can see, these look basically identical. But CAD JPY was dropping at a slower pace. It wasn't as aggressive. So CAD JPY hadn't even reached the mitigation zone, while USD JPY had. So I looked at this and thought, you know what? There's a chance, and it looks like there's still a position open here. So if CAD JPY wants to work its way lower, it'll probably bring USD JPY down with it. And guess what happened? USD JPY ends up wicking below, breaking below this low, ends up dropping about 10 pips below the low. This would have stopped out most traders. They placed their stop losses right below, maybe a few pips under, but this would have cleared out quite a bit of retail, or just anybody, really any type of buyer here that's following structure, smart money, whatever, head and shoulders, doesn't matter. Most people would have been stopped out there. And that's the specific reason why I use this. All right, that's why I keep in mind, okay, you know what? We have CAD JPY lagging behind a little bit, so that we have a better chance at this staying within the structure and the market rolling out for us. So CAD JPY was an excellent example of this specific, like my specific rule in my system. It took me years to really kind of get to a point where I noticed these things, and now it feels so evident and so transparent. But that's the thing, when someone just shines a light on something, you're like, oh yeah, it was right there the whole time. But when someone, when you're in the dark, you don't even know that you're supposed to look for something. Good luck. So all right, second concept was CAD CHF. So CAD CHF, I was still waiting for CAD CHF to get to this zone to reverse, and it did, but you know, it didn't trigger me in. It missed me by 2 pips. So we got to the zone. As you guys can see, there was a sweep of the liquidity from FOMC. Same thing happened here. And then USD CHF got to the zone right here, and it played off, right? This did a whole thing. And then it came back again, but this time I didn't take USD CHF because I was looking at CAD CHF. So I'm looking at CAD CHF here, and I'm seeing, okay, well, this is pulling back, and it's not as aggressive by any means. So when CAD CHF finally gets into the zone, it's lagging behind USD CHF, and the structure is just much better for CAD CHF. So this ends up playing out. Now USD CHF still stays within its structure, still respects these zones, so it still does a good job in my opinion. But now we're seeing how the market here, USD CHF is moving up really well. So I would love to still, because I still see these positions as long-term positions. I think we could start to really rocket up to these areas. Same thing here with CAD CHF. If you take a look at this, it actually looks even better. I think this could really continue to squeeze and go even further. And I mean, looking at just CAD CHF, it's actually been squeezing longer than USD CHF has. CAD CHF has been moving sideways for about 55 days. So a massive breakout is imminent here. It's totally imminent. So I would love to position myself in one of these pairs going against the CHF, because I think a big swing position is likely to go down for us here. And so all we gotta do is we gotta just, squeeze our way into something. And here we already got this, so this already did its thing. And then I can delete this fib level, don't really need that there. So what we saw with CAD CHF, and I'm gonna just put this into one screen. But I mean, you kind of saw it here, right? You saw the big spike down, and the market just slowly but surely rallied its way up. So now that we took care of all that, could we see a mitigation, right? Is there a position open here? And in my opinion, I think we have here is where we start to see the drop. Market chops up a little bit, and from here we see the sell-off. This is where all the fun begins. Friday, we start to see this fall off. So the CAD starts to work its way lower, and then we just get really, really, really choppy. So the market efficiently worked its way up. This is very healthy price action. So finding our way into this, I don't necessarily know if we're still going to close out a sell here, because we haven't quite gotten to new structure, but the market now definitely is pushing on up, and we're starting to see the market trade a little bit higher. So maybe we can close out the sell here sometime soon. There's definitely a lot of just efficient price action. So if the market drops back into the zone, what I'm curious about is, of all of these pairs with CHF, what's going to be the one? Which is the one that's going to run? Because you have a few. You have CAD CHF. You have, GBP CHF. Could GBP CHF be a player here? We had it push down, quickly rally back up. Looking interesting. It's trading where Friday's New York session's at, London session's at. So you have USD CHF. It's starting to move its way higher. All right, this is starting to move on up pretty well. We can definitely see where the market sold off from, right? This here, USD CHF, big move down on Friday before the market just chopped its way back up. Came down again, rallying. So okay, we have USD CHF here. We looked at GBP CHF, right? Okay, well, what about Euro CHF? Could this be an option for us? Euro CHF, same thing, big sweep down, works its way higher, loses momentum very quickly. Euro CHF really not as bullish as the rest of them here. And then you have the curveball, CHF JPY. No one trades this guy. This is just abandoned. Ain't nobody touching this. But could there be opportunity here? Is there a chance? Could CHF JPY get some love finally? I don't know. You tell me. This looks interesting. If you ask me, CHF JPY, it looks just like what? USD JPY, CAD JPY. It looks like the other ones, right? So I think there's just different things at play here. Going back to CAD JPY and all of these other positions, the yen in particular made this move. So the yen sweeps the high, drops, and this happens across the board. So if you can look at all of the yen pairs, and you're going to basically see the same thing over and over and over again. CAD JPY currently in between that 38 and 50%. USD JPY, you're going to see something really, really similar. USD JPY, similar scenario. Now you're like, all right, well, then what do I trade? I've been telling you, just trade the one that's lagging behind. UJ is kind of pushing up a little more than the rest of them. You can look at GBP JPY. Like, okay, well, where's this one at? Same thing, right around that 50%. Odd JPY. I know now you guys are like, oh man, this takes forever. Odd JPY is way up here already, so this is for sure not the one I would trade. This is way up here. I have zero intention in selling here, even though we're getting to pretty whole numbers, 100, blah blah blah. Odd JPY is just very bullish compared to the rest of them. You can even look at NZD JPY. Where's NZD JPY? Similar situation. It's retraced pretty deeply already, definitely well over 50%, maybe sitting at that 618 level as well. So you pull them all up, and you're thinking, what in the world of all of these setups? What do I even trade? So as of right now, after kind of reviewing the majority of these ideas, to me it looks like CAD JPY is kind of the slowest one to work its way higher. This could for sure change. And that's why I set alerts with specific pairs. And I know it's kind of a pain in the ass, but it'll save you money. if you're really well aware with like what's going on, it'll save you. Like, you will take the right one instead of getting wicked out with UJ or GJ. You can just, you know, cozy entries, real nice, real mellow. It's what we want, right? It's what we want. So good stuff, guys. For now, I'm leaning with CAD JPY. This could for sure change. Now, going back to those CHF setups though, because that was more, the focus more was on the CHF, not the yen, the CHF. And when we look at the CHF pairs, you have, for example, even odd CHF. Could this one be a better play? And this is just trading way differently, right? NZD CHF. These are trading so much differently than CAD CHF and USD CHF. So I want to see some buy plays, right? I would love to see buys here. And the big thing is I'm looking at CAD CHF to maybe close out this sell-off and then rally. You guys can kind of see that there's definitely like the trend line building up here. There's like liquidity building up here with CAD CHF. If you pull up USD CHF, it's doing similar things. I think USD CHF though has gotten a bit more of a bullish push. So we'll see what happens. If we get back down to here at some point, there's a good chance I'm going to look to take a buy because it would be closing out the sell-off from Friday. So let's see what happens. I think the longer we can stay bullish, the better and the more likely it is for these kind of setups to play out. Okay, so that's looking at a whole bunch of random ass pairs. I know you guys want to see the majors, right? What's going on with dollar? What's going on with metals? What do we do here? So today we got the action already. Dollar movement was big. One thing that could be influencing the market, whether it's right now or just in general for the week, is the fact that we are seeing a lot of action overseas. Like, we're seeing missiles being launched, we're seeing a lot of attacks, and I think they all connect. Basically, Israel is attacking Lebanon. Before I say the wrong things, let me double check. I haven't been too super dialed in. Alright, let's see here. Yeah. Alright, so yeah, there's a lot going on right now. So we might get that extra volatility because of that. So let's see here. Okay, so does the strike affect anything? It can. I mean, there are excuses, guys. Like when Ukraine and Russia started fighting, indices went absolutely crazy. Again, remember, these are all excuses to move money around. Billions upon billions upon billions and trillions are being algorithmically transferred, moved. Like Australian dollar, what is it doing right now? It's filling in balances. Obviously, we are in Asian session, so it's these things happen around these times for sure. You have NZD USD here. It's not moving as bullish, a little bit slower on the move, but NZD USD is definitely giving some signs here. Now let me close some things here. I thought I closed Spotify already. Spotify just doesn't want to let go. Please don't close me. Alright, cool. So right now, as we start to look at the different dollar pairs, clearly US dollar or Australian dollar, it kind of tried to give us a break of structure. This lured in a lot of sellers, took out a lot of buyers, tons of buyers, played off of here, tight little move, and then mitigated. And this was that Powell news event. But this was really showing us that the intention here was not to make bearish structure. So selling, in my opinion, selling something like this is probably not going to go well. Meanwhile, NZD USD, higher highs, higher lows, higher highs, higher lows. So is this, now here's a question for you guys, and I'm curious to see how you look at this. I'm going to tell you how I see this, but how do you see this? Is this a higher high, and then would this be a breakup structure? What do you guys think? So do you see the market like this? All right, so do you see the market like this? So you guys, here, I'll tell you how to vote. Is this structure? So this is A, and then now you could see something like this happen. Do you see this? So that's A. Or, all right, wait, so don't vote yet, wait. So that's an option, and this would be a breakup structure. Or do you see the structure like this? Higher high, higher low, higher high. Could be a higher low. Price failed to make this high here. So in reality, this is the low, and then here we're actually just still within the structure. So here, the market, is it breaking structure? Or did this actually just liquidate some more buyers and then now is still not quite bearish? So do you guys think that we're still bullish and then structure didn't quite turn out, A? Or do you see this as B? Where like the market here, so, and obviously I think you guys can tell what I'm looking at, how I see it. But in my opinion, structure, the real previous low that gives us the direction is this. The low, the high. Here, this is not a higher low because to me, this was never a true, we didn't really see the market shift momentum. This didn't give us higher highs. This just got back to the range again. And so for me, we would have to break these lows for the market to be completely shifting momentum and wanting to go bearish. So in my opinion, this push down that we just saw, like just now, this could be the start of a buy. We could be seeing a accumulation setting up here because we really did see the market clear these lows. You just saw it happen here. Wipe these lows out and then start to push. So I think we could see some buys from here. I would love to see market give us higher highs first and kind of give us more perspective. If this keeps dropping, let's say this just is not the case and this just goes back down and we continue to trade lower, then yeah, then I'm game. Then I think we could eventually see sells. So I'm curious to see what this turns into. And then we got Euro USD with the rally right now pumping. So everything is really, right now, it's really growing. It's building up against the dollar. So basically, we're seeing the dollar lose some steam, but AUD USD really just cooking right now, pushing. And then you got GBP USD. Now remember, guys, I talked about GU. Told y'all, look, this is gonna be fighting for liquidity. This is going hunting. This is gonna sweep, bringing out the broom. It's gonna clean them all up. So what did it do first? All right, cracked it down to here, and I mean, this was just liquidity textbook. First, it clears out this batch of buyers. Perfect. Comes back, and then it makes equal lows. All right, so now, now the game changed, right? Because at this point, now it's not about cracking the liquidity over there. This trendline liquidity successfully cleared out Friday's buyers. Perfect. Market comes back up. Guess what? Builds up and accumulates more retail sellers. Beautiful. So we know that there's sells in the game here. Lots and lots of sells. Then what happens? We get Powell doing Powell things. Pow pow. Market drops. Clears them out again. Oh boy. Wipes them all out. But what does it do? GU is a menace right now. All I can say is GBP USD is an absolute menace. This is just luring them all in. So right now, for me, there's just so many things to trade. So I wouldn't want to be in. I wouldn't trade this. Now I know some of you took sells on. I think some of you caught sells on GU. But to me, this is not something I want to trade. I'm not about this life right now. It's interesting. I would love for a setup to show up for me, but I just don't have it yet. There's motive for price to go higher, and there's motive for price to go lower. Let's say maybe there's higher time frame motives. Maybe GU is looking for something up here and maybe you can reject that before it drops. Let's go to the daily. Daily, not so much. Yeah, we'd have to go all the way back to March of 2022, maybe even higher. Because right now, the highs that we're seeing are at 1.3434-ish. So there's a lot of, guys, I mean, look at this. Let's just go to price action over here. This is where we were. This is March of 2022. February and March of 2022. You're seeing it all go down right over here. What is this? This is liquidity, equal highs. So this tends to be just something that the market really struggles to break above quite a bit. And to no surprise to anybody, or it shouldn't be a surprise to anybody, where we had liquidity back in February of 2022 and March of 2022, guess what? We're back. So the market clearing these highs and reversing looks probable. So then the question is, so what happened over here? Is there a position open here from February of 2022 that GU might be looking to mitigate? Can we find a position over here? Let's see. Here's the liquidity. All right. And what we see is this. GU just falls off the face of the earth here. Drops how much? 330 pip drop. GU in a matter of what? A day? 24 hours. Massive drop. Huge. Okay, so is there signs of sells anywhere? The only place maybe we could sell, we see a little push up here and then it all drops. I mean, maybe we're gonna sell from up here, but yeah, there's still more room to roll up here. Only thing I could see is we had a little push up here. It's not even that it clears that much liquidity, but that's about it. So there's, yeah, this right here is kind of the only place I would be looking for sells around there. Everything else, and this is, you know, basically distribution. Yeah, so okay, so it looks like the market could go higher if it wants to. It would be clearing up quite a bit of liquidity, and this still has, in my opinion, at least we could see this go up another 200 pips. Now that's diving way back down to back over to 2022 price action. Here, you know, do I want to trade something in here? Not really. I'm good. I'm good on all this. It's messy. There's a little push up here and then it drops. I'm not even trying to deal with that either. So at the moment, we're starting to see the markets rally. But for me, I need a bit more confirmation before taking an approach or anything. What we could see sells with Euro, maybe up here. Kind of saw a nice sweep up before it drops again. But it's all going to depend on how this moves. So I think we just need to let the market print a bit longer with the dollar pairs. Now, probably the cleanest setup of all of these pairs is going to be USD CAD. In my opinion, USD CAD is the easiest of the plays. You have the sweep of the highs here before the market comes crumbling down. I will add that the move that we saw here with USD CAD, so for those of you following along, USD CAD here, we saw it clear out a lot of money here. And I warned you guys about buying because of liquidity. And sometimes I don't like being right. And I'm not always right, obviously. But sometimes it does hurt a little bit just because I get it. This is a very enticing idea. The sweep of the low. And honestly, you guys got it too. You got the mitigation. So if you guys just at least paid yourself something here, then that was nice. Or at least you protected your entry. But the liquidity here, to me, I didn't want to just, I'm okay with missing out on possible plays. So this cleared the lows. But I want to add, this quickly came back up. So again, narrative. And if there's anything, and especially the more advanced traders, but even something to understand from the beginning, I think people, how do I want to explain this idea? Because it's a little bit more abstract. Okay, so candlesticks are a method of communication, right? Candlesticks communicate with us, like this is just how we perceive price movement. That's all candlesticks are. This is just a symbol to show us how price moved over time. That's what it is, right? So you can change your perspective, you can change your perception, you can change the candlesticks to show you how it's moving over different periods of time. Now, when we combine that, it's like you want to also understand candlesticks are like a language of money moving over time. So here, this is representing price dropping. But we have to add context to this, to everything that happens. So does this only mean, oh, price went down and now price is at 1.3420? Now, if you only read the market with the data, then you're missing the majority of the story. Because like everything, the data is irrelevant if we don't understand the context. What's the storyline? What is it representing? For how long? So when we see price crash here, and we see price get below all of these lows, so price sits below 1.3440, we can choose to say price got below the previous structure. This is below. These are, we're looking at daily time frames. So the price gets below the daily low. Okay. If you just look at the numbers, you are right. This gets below the previous low on the daily time frame. So then right now, people are going to see this and think, well, this is bearish. And if anyone gets into sells, they're probably going to want to see this go lower. But I don't think that's how this is happening. In my opinion, and again, it's just my opinion, but when you add narrative, when you add more so like perspective, context, you get to see, wait a minute, price gets below here, but it just quickly gets right back up. Like it doesn't really, why doesn't it trade down here? Why doesn't price stay down here? Why does it close the way that it closes? Why do we quickly work our way back up? Why is it by the end of the week, we're way over here? So now the weekly candle is telling you a completely different story. What's the meaning behind all of this? And so when you add context, especially when you understand the nature of the markets, because guys, remember, in order for these markets to move, there needs to be money on opposite sides of the spectrum. there needs to be enough buying positions and sellers positions for these plays to work out. So imagine, like for example, guys, imagine you wanted to place a huge order of apple cider donuts. Funny example, right? It's autumn out here in Chicago. Apple cider donuts are like the vibe right now. So imagine you're like, I need 1,000 of them. Okay. But no one wants to sell them to you. You can't get them. If no one wants to sell you anything, you can't get what you want. But price goes down enough in this example where they're like, you know what? I can't hold these positions anymore. We need to get rid of this. So in this example here, price is all the way down here. So price tanks. Now it's like, all right, everyone here, they used to have these positions. They were buying. They had them at these prices. And they're like, you know what? This is going down so much. I don't want to hold. I can't hold this drawdown. I can't hold this margin. I'm here. Yeah, you guys here. Okay, all of these buyers go, all right, yeah, we got to get out of here. Someone please take our positions. So gladly, right, gladly positions open up over here. And a lot of them can open up now because so much money was built up over here. So price has to get to certain levels in order to get enough positions in, and now they got way better positions and then they can rally. So hopefully that makes sense and that gives you guys a little bit more of a perspective on why these things are important. You can't just look, I mean you could just look at where price goes and you can trade that way and it'll work. It'll work sometimes. You just got to make sure that it works enough of the time. For me, I just, because it's like when you, that's why we call it like, you know, breaking out of the matrix or whatever. There is, in my opinion, there is kind of a matrix of the markets. There is trading patterns, which is fine. It can be profitable, which is the whole point, right? So does it even matter? And that's another question for another day. Does it even matter? And in reality, it doesn't. You can choose to trade patterns and trade a certain way, support resistance. You can choose to do that. And if you have a certain edge, whether it's how you maybe you exit at a certain risk reward that just works for you super frequently, and you have a good enough win rate to be able to trade it that way, then amazing. You did the job. The whole point is just to make money in a duplicatable fashion over a long period of time. That's it. For me, I felt like, okay, well, I red-pilled myself in the markets. I know so much, and in comparison to somebody, it's probably nothing, but I've learned enough about why things happen, how things function, how these positions are incentivized, that I can't ignore it anymore. And so I use that to my advantage. So you could use, so it's all based on what you want to use to your advantage. But in this case, this is the explanation of context. You can choose to see this as a lower low, or you can choose to read this and realize, okay, this actually liquidates buyers, traps sellers down here, and then the market quickly goes up. This gives us enough context to realize the intention for this market is actually shifting momentum. And so, could we see sells here? Yes. I think that we'll probably end up rejecting this because there is a big buy position here. This liquidates plenty of sellers. I think we can see a reversal here. I don't know if it's going to be super strong. Maybe it does. Maybe this just crashes heavily. But I think we could at least get a reversal back into structure, and that could pay us out enough. Do you know any break and retest profitable traders? Yeah, actually I do. And the thing is, their success isn't even the entry, because it's not always going to work. They're going to lose still. They still lose trades. But the fact is they can just do their thing for long enough. And also, it's not about, remember, break and retest is just the entry. But where do you pay yourself? At what point do you pay yourself? 1 to 1, 1.5R, 2R, 3R, 4R, 5R, 10R, half R? And that's what you got to find out. When do I pay myself? So, but USD, anyways, guys, long tangent. USD CAD, I think we can get a reversal from here. I'm going to take my exit if it does go my way. I'm going to take my money relatively quickly. I think I'd rather catch a nice little intraday setup here than hope for a big move. I do want to add, and I don't know how I didn't really notice this. I think it started to form recently, but we are starting to get a little bit of a trend line here too. Getting a little bit of this action, so let's see what happens. Maybe this will crack this trend line here, or maybe it'll happen later. But yeah, we'll see. Conservatively though, exits are good. So we'll see how this goes down. That's USD CAD, and then I guess we'll just kind of wrap up there. I think gold. I'm salty. I'm not gonna lie, a little salty. Came into our zone, playing out beautifully. I didn't take this trade, and I didn't take this trade because it already had come into the zone once, and then mitigated, so it closed out. I mean, we saw the reversal from the sells to the buys, so this did its thing. It came back down again. Now I wanted to buy as long as silver came to clear out this liquidity, which it still didn't do. It came to basically make equal lows. So, I didn't take my gold buy. And originally, I wanted it to take it because there was a sell-off, so I wanted to catch the buy, and it did that. It didn't trigger me in by I think 10 pips or something, which for gold feels like nothing. And then came back here, would have triggered the entry, and then which mine was at 27, and then it's up over 100 pips, so would be sitting at right around a 3R, but that's okay. It happens. And basically, guys, I'm gonna leave you all with that. I think that's enough charts for one day. Bitcoin buys were played off really nicely. These should have ended in break even if you did decide to participate with Bitcoin. Now, these buys mitigated the sell off and then are working their way higher. And this is looking good. I like where we're at. I think this is kind of gearing up for I wouldn't personally, I'm not buying right now. I am not buying here. I think that we are going to see a nice little, and by little I mean big, I think we're about to see a nice sell-off. So this should scare some people. All of a sudden it's going to come crumbling down, and here it comes. Here they go. Here comes the bears. So yeah, I think we could see some buys at 60K with Bitcoin. Here I'm going to, if we get here, which I think is pretty likely, here I'm going to start to move some stable over to some coins, and then I think there's a small chance that we can get back into 57K and below. But I'm going to be throwing a majority of my stable back into this because here's the thing. What I do, guys, is depending on how much we're moving up and down, I stop buying crypto, but I will buy stable, and so I'll put more and more every week into stable. That way, when we get those freak crashes, those huge moments, I can quickly just move money into whatever token. So if it's like I'm a bigger coin, then maybe through Coinbase. If it's something a bit more, a little different, then I'll have it on an exchanger on a wallet. So But yeah, I think we should see Bitcoin go into this 60K area from here. I don't know if Bitcoin's gonna go back to 57. ETH is holding this down pretty decent, so ETH is holding this pretty well. So we'll see where ETH goes, but yeah, I mean, I think ETH also has left quite a bit of imbalance left behind as well. So ETH getting to FOMC, and that's basically what it is. I think we're gonna come back to these FOMC areas and then go play off from there. So I think we can go and close out FOMC movement and then pump from there. So let's see what happens, fam. Let's see what happens. But yeah, so this is the FOMC price action that I'm waiting for at the moment. Cool. Well, guys, with that being said, I will catch you all again soon. If you guys have anything that you need, let me know in the description. For those of you that are here, maybe just hearing me for the first time ever, in the description, or you can get a bit more information on how to learn with me. If someone invited you to this, then hit them up. They can probably point you in the right direction. I also have tons of free stuff here on my channel. And then, of course, if you guys need anything else, any resources, check out the description. I have since I manage multiple accounts, I have the website that I do that for. If you guys are not journaling your trades, do that. Also have a link there. And then, again, I'll be trading live. I'll be doing this, but New York session live, November 17th to the 23rd in California, Arizona, and Texas. So I'll see you guys there. Any questions, you shoot me a message on IG, and I'll happily get back to you guys. But enjoy the rest of your day and trade with discipline, fam. See you guys all